There's been a trend going around that if you buy certain stocks, they're gonna replace your full-time job in the future.
In today's video, we're gonna go into 3 stocks that everyone needs to own or be buying right now. A $50 buy can change your life.
I want to talk about whether putting $50 into a stock can actually replace your full-time income, and if it can, then what are these stocks? Because I want to buy them. The only way to know whether this is possible is to delve into the past. Let's look at some of the famous stocks that we all know about. If you put $50 into Amazon stock when it IPO'd 28 years ago, today you would have a 250,000% return. 250,000 means that $50 would be worth $125,000 today. Okay, how about Microsoft? Microsoft went public back in 1986. If you bought back here, you would have got a 414,000% return. $50 with a 414,000% return would be worth $207,000 today. The average full-time job in America earns a salary of $66,000 a year. So from a technical point of view, it is actually possible to do this. But first, you've got to get in really early into these stocks. And second, there's only a very small percentage of stocks that have done this. I've picked out 2 of the big stocks that we all know about. For those 2, there's tens of thousands of stocks that didn't do this. You need to have a very keen eye to pick these out. So what stocks did these guys choose which they believe have the potential to do so? Let's have a look.
Alrighty guys, first one of these 3 stocks that everyone should be buying right now or own is AMD. AMD. Everyone should buy the stock or own this stock. And they're one of maybe 2 companies in the world that's extremely well positioned to benefit massively over this next 10, 20, 30 years. Whenever I think about these sorts of companies, I think about NVIDIA and I think about AMD. And that's going to be one of those stocks that I'm going to look at a couple years from now and is going to say 100% plus gain. I truly believe that. I truly believe this stock will be a 300, 400, 500, even more than that dollar stock in the future.
Okay, a bit of a regular popular pick you'd likely get amongst investing influencers. Let's take a look at the stock. So it retails for a price of $115 a share right now. That is up from the $49 that it was back in 2020. It's a $185 billion company and it's got a PE ratio of 114. Whoa, that is big. That's expensive on a price to earnings basis. Why is it so expensive? Well, first of all, you need to understand the running narrative behind AMD, the investment thesis. AMD is a company that develops computer processors, CPUs and GPUs. A computer processor is like the brain of the computer. It's the part that performs the calculations and instructions that allow your computer to run programs and perform tasks. With AI and technology being so ubiquitous these days, you can imagine how important the brain section is to AI and to tech as a whole. The companies who make the brain behind the technology is obviously a very powerful company. This is why the likes of NVIDIA has done so well, and it's why investors are so interested in AMD stock. They develop a product that is so needed in modern day society, and of course in the future, it's likely to be even more needed. If we look at the revenue for AMD, they have been crushing it since 2020. It was 9.7 billion, and that has increased to 25.8 billion. Net income, however, has struggled a bit. It was 2.5 billion, and now it's 1.6 billion. My guess is they're probably reinvesting a lot of this revenue back into research and development, into these chips, which I guess is to be expected. Okay, so it's definitely a stock that has potential, but the price is quite high because so many investors want to own the stock right now. Now let's just do a little bit of math and see if putting $50 into the stock can replace your full-time income. So okay, as we said, the average full-time salary in America is $66K. If we put $50 into the stock, it will need to increase by 131,900% for it to be worth $66,000. If the stock increased by 131,900%, that means the price per share would go from $115 to $150,480. It means that the market cap would go from $186 billion to $245 trillion. Right now, the biggest company in the world is Apple at 3.6 trillion. So that means it would need to grow to something 68 times larger than Apple is today. Okay, so that's basically impossible. $50 into the stock will not replace your full-time income or get anywhere close anytime soon or anytime far. But it can definitely help increase your net worth. That could certainly be in the realm of possibilities. Let's see what the next stock has to offer.
Alrighty guys, next one up here, second stock. For these stocks that everybody needs to be buying right now or own, it's this one, Meta. Unbelievable company. I have over $1 million invested in this stock. Now you may look at the stock, you may say, okay, you made a fortune on this stock, Jeremy, but is it still really a buy, right? It's great if you already own it, but is it still a buy? Here's the deal. Meta's still a buy. It's still an easy money buy. Even at this day and age, even after all the gains, it's still an easy money buy. When I think about like an ultimate safety company, like if you told me there's one company I had to buy and I could not sell the stock for the next 10 years and I had to have all my money invested into it, right? If you put me in that scenario, like one of the first stocks I'm going to think of is going to be Meta.
Okay, that's a pretty extreme statement. I mean, there's so many stocks in the world that you can choose from and you pick Meta as the best. Let's brainstorm some of the reasons why investors like Jeremy are investing here. First, you've got Meta's core business, which is very strong. They dominate the world of social media. They own Facebook, which everybody and their grandma are on. Facebook has roughly 3 billion monthly active users on the platform. 3 billion, that is almost half of the world. That's so big, it's almost hard to comprehend. Then Meta owns Instagram, which everybody and their favorite celebrity is on, posting about how good of a person they are and how much good they're doing in the world. Am I right? Instagram has roughly 2 billion active users. Meta also owns WhatsApp, which has 3.1 billion active users. And of course, don't forget Threads they own, which no one really uses. This group of companies, you can minus Threads, dominates the world of social media. And if it's well maintained, it's an extremely strong business model. Of course, every company needs a good leader, and you can argue Zuckerberg is one of these. Especially when we're talking the new and improved Zuck who's doing martial arts and is starting to look more like a human these days. He's young, he's smart, he's been in tech basically his whole life. He's the kind of guy that you want in charge of a tech company as opposed to a college graduate who's old and climbed his way up the corporate ladder. Of course, he had this grand idea a few years back of starting the metaverse. He even changed the name of the company from Facebook to Meta and has put $46 billion of shareholders' money into the idea. Investors like Jeremy are quite bullish on this idea.
The Quest products, I mean, that's really been something that's really been taken off over the last few years. And so, think about from nothing to what they have today.
I'm not as convinced as him. I mean, do people really use the metaverse products like Quest these days? I mean, I don't actually think Meta has formally released the numbers, but I did find a few reports which said it had over 6 million monthly users, which is not massive on the grand scheme of things. I also saw they made $2.1 billion in terms of revenue. That's revenue, not profit, from their virtual reality segment, which is not big compared to how much they've invested. So I do like the core of Meta's business. It attracts attention, which is the modern day currency, and they basically print money from the advertising revenue from this. But the rest of the business, I'm not convinced of as of yet. Also, I want to be clear, putting $50 into this stock is not going to replace your full-time income. As we said, if you put $50 into a stock, the stock would need to increase by 131,900% for it to be worth $66,000. Meta is $703 a share right now. If it were to increase by 131,900%, it would become worth $927,960 a share. The market cap is 1.7 trillion. If that were to increase by 131,900%, it would be worth $2.2 quadrillion, aka $2,200 trillion. The entire world's GDP right now is $105 trillion, so it would need to become 20 times more than the entire world's GDP. Let's just say that's not going to happen. The mindset that you need to have with investing is not just put a small amount of money into a stock and then you go sip cocktails on a beach because you're going to get rich soon. Yeah, you put small amounts of money to start with and then you keep investing small amounts in and you keep doing it on a monthly or weekly basis. That's the process to become rich. It's not going to happen straight away because, of course, you've got to give it time for compound interest to work its magic. Let's say you put $100 as your initial investment and you keep investing $100 every month and you get a 10% market return. In 30 years, that's worth 200K. In 40 years, that's 500K. In 50 years, that's 1.5 million. That's the better way to think about becoming rich with small amounts of money. You don't just put a small amount in and then forget about it. No, you be consistent, and of course, you've got to choose good quality stocks. Basically a perfect time to put in the sponsor of today's video. On August the 14th, we got some interesting news out of China. they decided to restrict their export of antimony to other countries. China are the largest exporter in the world of antimony, and it is where the USA get most of their supply of this important metal. This metal, antimony, is so important because it's used in all manner of applications for the military. For defense. It's used in the manufacture of armor-piercing ammunition. It's used for night vision goggles and infrared sensors. It's used in the manufacture of military clothing, communication equipment, and flares. With China dominating the antimony market, there's a big vulnerability for the supply chain stability for American defense contractors and for military manufacturers. This is why you should check out the sponsor of today's video, Military Metals. They have acquired a portfolio of advanced exploration antimony, gold, and tin properties, including 3 historical sites in Slovakia, which has rich mineral resources and a stable economic environment. They have a property in Nova Scotia where records document nearly 32,000 metric tons of production between 1914 to 1917. And they have one in Nevada, USA, which hosts several historical antimony gold occurrences. With companies like these, the USA has less reliance on China for military equipment and can rely on a Western supply. Military metals are in a very important market in the modern era, so do your homework on the stock. Now let's see what Jeremy's third stock choice was.
Third stock of these 3 stocks up here is Nike. Rare buying opportunity. Every once in a while you get an incredible buying opportunity in regards to Nike. You had one right here. You had one right here. You had a massive buying opportunity in Nike right there. Massive buying opportunity in Nike right there. And then recently you've had this massive buying opportunity. Very, very rare situation here for just a one-of-one company. I mean, just as legendary companies get.
Nike is obviously a very established brand, and I would say a good quality one. It's been around for a while, it's not exactly just had its IPO, and it's not exactly selling for a low market cap. Its price is $77 a share, $114 billion company already. Now, one of the reasons why Jeremy talked about liking the stock was it has gone down in price, which we can see. It was $175, now it's $75. It's also got a lower PE ratio than many stocks at 23. And the key reason why this stock has gone down in price is because they've struggled to convert profits. In 2021, they had 5.73 billion in income, and in 2024, they made 5.7 billion. Funnily enough, investors don't like it when your profits are not growing. Although Nike have a solid business, a pretty reputable brand, they're not really the type of stocks where you're going to see major returns on. It's more of a conservative investment where you can get stable, but maybe lower returns compared to other stocks in the future. So as much as I would like to say you can change your life with a $50 investment, it's probably not going to happen. However, a $50 investment that you keep investing every month, that's a different story.